All right, so we have talked about the chapter number 1, which is introduction to the audit, and chapter number 2, which is ethics, chapter number 3, which was corporate governance. And again, this is my sequence that you need to follow. And then we are having the internal audit department as a chapter number 4. Okay, now the chapters onwards is according to the audit cycle. An audit cycle is something, the stages which we follow in performing the audit. So the first stage is, let me first of all draw the audit cycle. So the first stage is audit planning, and then it is being followed by the evaluation of the client's internal control system, and then ICS means internal control system over here. And then, so there will be two results. There will be two results. Either the system is strong, system proved strong, or system proved weak. If the system proved strong, we'll be doing less substantive testing. If the system proved weak, we'll be doing detailed substantive testing. And then whether less or detailed, it will be followed by the review stage. And the last stage is going to be the report stage, the audit report. So this is the audit cycle. Now, the chapter number 5 is going to be audit planning. And risk assessment. Now, audit planning and the risk assessment. So in this chapter, we are going to talk about the audit planning. And the first thing first is understanding the entity. Understanding the entity, the client, understanding the client, the company we are going to audit. What we need to understand regarding that, for example, their accounting policies, their major customers, their major suppliers, their financial results, their industry, laws and regulations related to that industry, etc., etc. And then the main activity is going to be the risk assessment. This is something very, very important for the exam. And in every attempt, every time, this is being tested. So risk assessment means the audit risk, the risk in the audit, the risk of material misstatement, the financial statement risk. For example, whenever auditor is doing the audit, at planning stage, they are going to perform the risk assessment. Like, for example, a criminal investigator investigating a criminal offense. For example, a murder case. So first of all, that particular investigator, the investigative officer, is going to bring the suspects in his findings. Obviously, first of all, they will be identifying the suspects, the people who may be involved in that particular murder. And then once the suspects are being identified, then they will be testing, investigating each and every suspect. So this works the same way. When we are auditing the financial statement, first of all, we identify the areas where we may have the material misstatement, we may have the errors, we may have the omissions, we may have the manipulations, we may have the exaggerations, window dressing, creative accounting. So where there is a possibility that the management may have overstated the assets, where there's a possibility where the management has understated the liabilities. So risk assessment is all about identifying the audit risk. Like, for example, you're taking the understanding of the entity, and they say, like, for example, it's a mobile phone company. They sell the cell phones, mobile phones, and they say you that we launch mobile phones every 3 months. Every 3 months, we are having the new models in the market. And then you ask, okay, what about the old models? They say we reduce the prices of old ones. Sometimes, the significant discounts are being offered on the old models. So then you immediately bring this thing into your mind. Okay, the mobile phone they sell is their inventory, and they have significantly reduced the prices. They are giving a significant discount. According to IS2, inventory should be recorded at lower of cost or NRV. So there is a risk that they may have stated their inventory still at cost rather than NRV, and the inventory may be overstated. So at the planning stage, what you are going to do is you are taking understanding of the entity, and alongside what you're doing, you're identifying the risk of material misstatement, the areas where you may see the risk of material misstatement. And then it will be accompanied by the responses, the auditor's responses, auditor's response towards the assessed risk. Like for example, they told us that they have disposed some of the assets during the year, and we got this information during the understanding the entity. So we brought the risk in our mind. Okay, there's a possibility that the disposed assets are still part of the asset register. The auditor response would be that we'll be checking their asset register whether or not those assets which are disposed are being removed. So this is something a very, very important area. And remember, this area requires your financial reporting, financial accounting knowledge, because it's about IS2 inventory that according to IS2 inventory should be recorded at the lower of cost or NRV. It requires, the IS38 thing that research and development, research should be expensed out, development should be capitalized. So I can write for you which are required over here. And if you have done your financial accounting paper, probably you have done it. So you need to see these things. IS2, which is inventory. So particularly see this thing. And then IS16, which is, property, plant and equipment. And then you see, the IS36 thing, which is impairment. You should know what is impairment, the carrying amount, the recoverable amounts. And then similarly, IS38, which is intangible assets, intangibles, particularly the patents, the research and development, intangible asset. Okay, so yes, these are, the main ones. And then the revenue standard, you should know something regarding that revenue should be recognized when performance obligation is satisfied. So the revenue standard, which is, IFRS 15, the revenue from the contracts with the customers, etc. So the examiner may test your financial reporting knowledge over here, because you are auditing the financial statement, so you should know how the financial statements are usually prepared. But anyways, whenever we will be looking at such situation in the question where the accounting knowledge is required, I will revise that particular area as well during the question. So this is what you are required in the exam to have the financial reporting knowledge, financial accounting knowledge. Now coming how this is tested in the exam, first of all, mainly the constructed response question. Always we have a case study question from this area. There's not a single attempt where the examiner has missed it. So every time. And then we may have, the objective test case questions, and also the knowledge-based element. For example, differentiate between audit strategy and audit plan. And similarly, what is materiality? What is performance materiality? So there is a lot of theory in this particular chapter. So understanding the entity, risk assessment, and then the audit risk and the auditor response, one of the main area of this paper. So you can expect, 20 to 24 marks from this area of the exam. So, saying 25% at least of the exam. Okay, then we will be having the sixth chapter. This chapter number 6 is the internal controls. Again, something very, very important, and also something very, very interesting as well. So in this internal controls, we'll be studying the sales system, What are the objectives of the sales system? What are the control activities within the sales system? The test of control the auditor is going to perform, the weaknesses, the strengths within the sales system. A very, very interesting chapter. So sales system, purchase system, non-current asset system, inventory system, payroll or wages and salary system, the cash and bank system. So you're going to study these systems in detail. The systems, their objectives, their control activities within, for example, the credit function, the credit ratings, the credit period, good received notes, goods dispatch notes, asset registers, budgeting. So all these things pertaining to the system. And now exam focus thing. In the exam, you will be having always a constructed response question, a case study question from it, in which the examiner gives you a case study and asks you to identify the deficiencies from the system, define the impacts of that deficiency on the business, and provide the recommendation to the management how to overcome the weakness. And then the test of controls. Now, this is something related to the internal controls. We'll be studying that thing once we are into that area. Test of control means how the auditor tests their controls, what are those tests, and how those audit procedures are performed. So again, a case study question, then again, the objective test case questions as well, sometimes, but obviously we see questions coming from this topic in terms of objective test questions very, very few times, yes. So then we have the last thing, the knowledge based. Yes, the knowledge based is, for example, methods of documenting the internal control system, the flow charts, the narrative notes. So we see that portion in the exam sometimes as well. Then the 7th chapter, which is something most important in the FAT exam. So you can say nowadays it is 30 to 35 or sometimes 40% of the exam, which is audit evidence and substantive procedures. Audit evidence and the substantive procedures. So now these are the audit procedures pertaining to the financial statement. For example, how the auditor tests the property, plant, and equipment, how the auditor tests the intangible assets, the bank and cash figure. So these are the audit procedures related to the balances of the financial statement. So property, plant, and equipment, sales and purchases, receivables and payables. So this is something very important. So you are going to understand, you're going to learn how to make the substantive procedures, the audit procedures relevant to the financial statements. So usually we have the constructed response question from this area. Now, for example, what is property, plant, and equipment? We know the assets which are used in the production, supply of goods and services, and rental to others, and administrative purposes. Like, for example, the examiner will ask you define or explain the audit procedure pertaining to the purchase of property, plant, and equipment. So if the management has purchased the property, plant, and equipment, how the auditor can test that? How the auditor can test that particular transaction? So what we will be writing, inspect the asset register to confirm the additions, and review this bank statement to see the outflow from that particular bank statement. Because if the company has bought the asset, obviously there will be an outflow in the bank statement. We can compare the amount in the bank statement with that of purchase invoice, because it should be the same amount that the management is transferring to that company from where it is they are buying the asset. Physically inspect the asset to confirm whether that is available in the working condition, see whether the depreciation is being charged. So this is how you're going to apply the substantive procedure. So substantive procedure is all about, checking that particular transaction within the financial statement and related records, ledgers, registers, and things like that. So very, very interesting area, and something very important for the exam. And then objective test case questions. So The other objective test case questions are simple, but if you're having the objective test case question from this area, they're going to be a bit technical. A bit technical means you need to have understanding of each and everything. So this is one of the most critical and important area of the exam, though interesting as well. And the knowledge based, here the knowledge based is examiner may ask you, for example, write the procedures of the bank and cash, write the procedures of receivables and payables. So here the knowledge based element means the straightforward procedures. The straightforward procedure will be having within an exam question. Then the 8th chapter, which is the review. Now, obviously this chapter is something very easy. The going concern assessment, whether the entity can continue for the foreseeable future, looking at the subsequent events, whether the events occurred after the year have been identified and been recorded or disclosed properly. And then we will be having an overall review of the financial statement. Okay, once we are done with it, again, first of all, let me write the report chapter and then we'll tell you how this is being tested in the exam. So then we have the audit report thing. So the audit report is, what is an audit report? What is modified? The types of reports, the modified report, unmodified report, the types of opinions, and then again some theory from this report as well, the key audit matters and things like that. So how these two areas are tested in the exam, the same thing, constructed response question. So examiner give you a case study in which you identify the factors based on which you say the entity is not a going concern. Subsequent event in the case study, the impact on the audit report. So constructed response question, objective test case questions, and sometimes the knowledge-based element as well. Now, the last chapter is purely the theory, which is computer-assisted audit techniques and the audit sampling. So the computer-assisted audit technique is using the audit softwares, the test data, the benefits of using the auditing software, and benefits of using the test data. And then we do the audit on the sample basis. What is sampling risk? What is non-sampling risk? And the types of sampling, the methods of sampling, all these in the chapter number 10. So this is the complete paper of the F8, and I've given you the flavor of each and every area. So chapter number 1, introduction to the audit theory. Chapter number 2, ethics for the auditor, the situation you need to understand within the code of ethics. Chapter number 3, corporate governance, board structure, directors, and things like that. Chapter number 4, the internal audit, the difference between the external audit, and etc. Chapter number 5 is the first stage of the audit cycle, which is audit planning and risk assessment. Here you need to have the financial reporting knowledge, because when you're taking the understanding of the entity, you need to bring the financial statement perspective of every particular situation into your mind. Chapter number 6 is all about internal controls, a very interesting chapter based on the common sense, the systems which you have already studied in your BT exam. But for example, if you do not remember, then there's no problem. So very interesting that, for example, examiner is going to give you a case study. Let's assume a sales system, and they will ask you to identify and explain the deficiencies. For example, a company which sell online and they deliver the product to the customers. And when they deliver the product to the customer, they do not take signatures on the delivery note. So examiner asks you whether or not it's a deficiency. Yes, it's a deficiency because the customer can later on claim that they have not received the goods. So it is going to be a very, common sense based thing, and you are going to enjoy this area. Then the audit evidence and substantive procedure, something very important, technical, and a good portion of the exam, which is around 30 to 40% of the exam. So this area will either make you pass or fail the paper. Review is the going concern, the subsequent events. The report is the types of report. And the last chapter is a theory-based chapter, which is computer-assisted audit techniques. And then we have the sampling thing.